Gold is near all-time highs right before the US CPI release. But this report doesn't move gold. It moves the US dollar and that moves gold. And here's the scary part. One number can flip the trend in gold. So the real question is back to $4,200 or keep going to record highs. Hi, I'm Dhwani Mehta and I'll explain how gold could react to the US inflation event risk in this video. Gold is closing on record highs as you can see in the daily chart. The constructive outlook for gold remains intact in the lead up to the US CPI release, which could alter Fed rate cut bets and thus impacting the US dollar and gold. I'll break down the technical setup and the potential scenarios going into the event in this video. Gold has been the best performing asset in a year of poor US economic performance. Let me explain why. Fundamentally, non-yielding assets such as gold tend to thrive in a low interest rate regime, and US futures still expect 225 basis points interest rate cuts in 2026, pricing in a total of about 60 basis points of easing next year. Data on Tuesday showed that the US non-farm payrolls rebounded by 64,000 in November after the economy shed a whopping 105,000 jobs in October. Meanwhile, the unemployment rate climbed to an over 4-year high of 4.6% in the same period. So all these factors have supported the bullish trend in gold. But how does this critical US CPI release impact this bullish picture? As measured by the change in the core consumer price index, inflation in the US is expected to hold steady at an annual rate of 3% in November. This measure excludes volatile items like food and energy and is the most important one for the Fed and markets. The headline CPI is also forecast to rise by 3% in November at the same pace as seen in October. Now, the central bank's inflation target is 2%, so any of these measures are expected to remain well above the Fed's target. Therefore, is it time for the Fed to finally pull plug on rate cuts? That's what markets are trying to figure out. Any meaningful deviations from the expectations, especially in the annual core CPI print, could trigger a significant market reaction. So, if you are trading gold, what should you focus on the US CPI release? Let's break two main scenarios for trading gold, either of which could play out on the US CPI release. First, hotter than expected annual headline and core CPI prints could take bets for a January Fed rate cut off the table, fueling a sharp recovery in the dollar while knocking gold down towards the $4,200 area, which I explained in my previous video. That's a powerful support as the 21-day simple moving average intersects with the 61.8% Fibonacci retracement ratio or a golden ratio of the October correction. Also, you can see here that buyers have managed to defend this support earlier this month. On the other hand, an unexpected deceleration in the inflation data could double down on expectations of more Fed rate cuts next year. Now, this dovish outlook could fuel the dollar downside while lifting gold to retest record highs. The relative strength index, as you can see here, is floating with the overbought territory, not yet overbought, suggesting that there remains more room for the upside. To summarize, only a significant uptick in inflation data could change the market's view of the Fed's rate cut trajectory for 2026. In such a scenario, the key support to watch will be the $4,200 level. Otherwise, the bullish trend towards record highs should continue. However, any reaction to the data could be short-lived as investors turn to sidelines heading into the Xmas holiday season. So, will gold see sharp moves in response to the US CPI data? Comment gold up or down to let me know your thoughts. Thank you.